Hello currency traders, and welcome to the weekly wrap-up from forexlivetoday.com. Today is the 1st of October 2011, so this brings us to the end of the third quarter for 2011. These videos are brought to you by forexlivetoday.com, a totally free website just giving you information, helping us as traders work together. We've got everything stacked against us as private traders, so any information we have, beat the banks, is welcome. No obligations, just free info. Some good articles on there from global respected analysts. I was just reading up on how world stocks have had the worst quarter in 3 years this quarter. And if we look to our benchmark S&P 500, you can see quite clearly here the bearish momentum that we have. However, we are stuck in this range for now. However, the outlook is considerably bearish. Let's get that straight. This week we did not reach the top of our range. We stalled out well below, and well below, and then moved back down, particularly on Friday, a very active day on Friday. I did expect this week to be fairly flat, fairly uneventful, so I guess Friday's movement was a little surprising, but having said that, it was the end of quarter, so I guess some movement, some balancing going on there. So not a huge change to our outlook for our equity markets. Of course, with the sovereign debt crisis in the UK, in Europe, the major concern. Now, we did have some positive news regarding that coming out of Germany on Thursday, I think it was, regarding a yes vote, anyway, to approve the increase of funds, which enables the second bailout of Greece to go ahead. Now, while all countries in the EU have to have this vote, it was Germany were the ones that we really wanted to see, because they have been the country that's been making the most noise about it. A bit of dissent in the ranks. However, it did pass quite strongly. Didn't really do much in terms of bullish momentum for the markets. However, did virtually nothing. So you could imagine what a no vote would have done for confidence and risk aversion. Now, moving across to our currencies, and I'm giving us a bit of a wider view this week, a bit more history, longer term charts, because a few of our majors and some of the minor currencies too are at critical points. Starting with the euro, you can see here is our close for this week, around 134.15, say 134.10. And it's the lowest close we've had for quite some time, since back here in January of this year. We have a long-term rising trend channel here. We have some pretty major resistance here, horizontal, so you can see what a critical point this is. A break to the downside. Aggressive traders might like to trade straight away on the break. Conservative traders perhaps waiting for a retest of this level. But having said that, there's the opportunity for bounce from here. There's the opportunity of a fake out and then a bounce. So when trading these key levels, there's a good chance you're going to get the first one or even two wrong. However, if you have a medium-term view, or at least not a scalper's view, even if you do get the first two entries not quite right, the third one should more than make up for it. So zooming in a little closer, give us a close look, you can see this bearish momentum going into Friday. Really weak it was, the euro on Friday. However, you can see it has tested these levels a few times, so this level really key. First thing Monday morning, or Sunday night for Europe, key to future direction. And moving across to cable, again with the longer term view. Now, I was saying last week, I think, or the week before, how weak cable has been. Well, it has bounced off this major support here at 143.40. It has bounced. However, if we zoom in, get a closer look at this week's action, you can see it's stalled out. So I think there's a high probability that we're going to see some further downside here, and then again testing this support, play the long side from the break, from no break, the short side from the break. Be wary of fake outs, but once again, even if you get the first two entries incorrect, the third one, if you get it correct, will more than make up for the first two attempts. Now, remember, when you're playing the major currencies, don't put all your eggs in one basket. Don't be short euro, short cable, short, lots of currencies against the US dollar. So you want to make sure that you don't over leverage yourself and leave yourself open to expose yourself to one currency too much. Okay, dollar yen, again the long-term view, and you can see clearly bearish, however with this bottoming pattern forming here. Finally, we're coming to decision time, not before time either for this pair. Really long drawn out bottoming process. We've got our downtrend here, we've got our floor, which I've been talking about for weeks here, and so for a longer term outlook, you want one of these levels to go. Having said that, I've been mentioning for the past, I think, 2 or 3 weeks that 76.30 is my level. So buy orders set at 76.30 for 30 or 40 pips to the upside has just been like money for old rope. So I hope that you guys have been, wisened up to that one as well. Finally, if we look at, for the majors, that is dollar Swiss, and once again we're seeing another bullish flag here. So let me just bring up, you can see we have our flag here with our flag pole here. So really it's a bullish momentum, it's a bullish continuation pattern that we have here. We had another one here which brought us back down to test the first rise. So a break of this to the upside, hey, looking good. But again, if you're going to be short euro, short cable, you probably don't want to be long dollar Swiss. You need to choose which one that you would like to, which one you think will give you the best exposure to a long dollar position. Okay, so that's it for the majors. Now, before we move away from the majors, euro. We have major event risk next week. We have ECB rate decision on Thursday. However, that gives you at least 3 days from the start of the week to play these technical levels before, probably a good idea to exit the market before that rate decision, because there is a very high chance of an interest rate cut, or at the very least a policy stance change. The same with cable. However, the chance of a rate change is 0, but the chance of a policy change, for example QE3 or their form of quantitative easing, buying of bonds, they have hinted very strongly that they are very seriously considering it. So of course any form of monetary stimulus like that will be bad for the pound, will be good for short cable positions. So now I want to talk about the Aussie dollar. So the Aussie versus the US dollar. Again, long range. Now we've got a really long term trend line. Look at this. Back from the start of 2009, the bottom, there it goes all the way, and we've broken it. We've been up to retest it, and we're back down here. We have our medium-term trend line there, broken, retested, and back down here. So I had this trade up on the website this week, something for you to look out for. Definitely looking good. Definitely looking good. Interest rate expectations for the Australian dollar are weak. So the whole reason that this Aussie dollar has been so strong, as well as risk, obviously, with the stock market going up, the Australian dollar goes up. When people want risky assets, the Australian dollar is going to be something that they will buy. However, having such a big interest rate differential between the Australian dollar and the US dollar, has caused a lot of the strength. Now, if you start to take away that interest rate differential, as well as having bearish outlook for equity markets, risk aversion, you're really setting up for some strong moves down. You can see they've started to happen already, but as you can see when we zoom back, there is a long way for this to fall. We're talking about down to 60 cents. So, let's start to get positioned, for some longer term trades. Another currency pair that I would like to look at, and that I highlighted last week as well, is Euro Pound. You can see our rising trend line all the way down with that big move again on Friday, with the weakness in the euro, down to test this trend line. So once again, you have opportunity for bounce, you have the opportunity for break and short. So here, all the levels are there. There's lots of choices to be made. Just keep in mind that you have that risk event coming up on Thursday with the ECB and the British pound. I forgot to mention the Aussie dollar. We have interest rate decision on Tuesday, so that could really be the catalyst if they do start cutting rates, which I don't think that they will personally in this meeting, but they may give an indication that in the future they will look to. So yes, after that decision on Tuesday, I'll be very, very, very keen to start positioning into this. I think that's it. See you all next week. Lots of opportunities. Take note of the levels. Good luck. See you next week. Bye for now.